Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, November 24, 2025, and here is everything you need to know as the markets open for today. Wall Street delivered a strong rebound on Friday after a turbulent week, with the Dow Jones surging 493 points, or 1.1%, to close at 46,245. The S&P 500 added 1% to finish at 6,603, while the tech-heavy Nasdaq Composite gained 0.9%, closing at 22,273. The Friday rally was fueled by comments from New York Fed President John Williams, signaling a December rate cut remains on the table, offering relief to investors worried about monetary policy direction. Nvidia beat expectations with third-quarter revenue jumping 62% year-over-year to $57 billion, though the stock ultimately closed nearly 3% lower on Thursday, after initially rallying in after-hours trading as concerns about AI valuations persist. CEO Jensen Huang dismissed bubble concerns, stating demand for their Blackwell chips remains exceptional, with cloud GPUs completely sold out. Walmart posted stronger than expected sales driven by robust e-commerce growth, with shares gaining over 6%. Despite Friday's gains, all three major indices posted weekly losses, with the Nasdaq down 2.5%, the S&P 500 losing 2%, and the Dow falling 1.8%, marking the steepest weekly decline since March. Looking at Indian ADRs overnight, we saw mixed performance with clear divergence between sectors. Infosys stood out as the top performer, surging 3.33%, signaling renewed interest in Indian IT stocks. However, the banking ADRs faced meaningful pressure, with HDFC Bank slipping 0.57% and ICICI Bank declining 0.55%. Reliance Industries GDR also retreated 1% to $59.60. This mixed ADR action mirrors broader global concerns about financial sector valuations, though IT strength provides some comfort. Turning to Asian markets today, we're seeing a bifurcated performance, with some markets showing resilience. Japan's Nikkei 225 is trading 2.46% lower this morning, showing weakness as tech sell-offs continue in the region. However, Hong Kong's Hang Seng is nearly 1% higher, suggesting selective buying in Chinese equities despite recent concerns. The Shanghai Composite is trading flat, indicating consolidation as traders assess global and domestic cues. This mixed Asian action reflects cautious sentiment, with investors cherry-picking opportunities. Most importantly, GIFT Nifty is currently trading at 26,160 levels, down 98 points from Friday's close. This suggests a modestly negative opening for Indian markets, signaling that investors are pausing after the recent rally and taking some profits. The key will be whether the Nifty finds support at these levels or if bears push for further downside toward the 26,000 zone. On the global front, concerns about Federal Reserve policy continue to dominate markets, though dovish signals from Fed officials late last week have provided some comfort that a December rate cut is still possible despite mixed economic data. President Trump's continued pressure on the Federal Reserve and recent firing of Fed Governor Lisa Cook have raised questions about central bank independence and created additional uncertainty. Geopolitical tensions remain a background concern, with ongoing friction between major economies, while central banks worldwide navigate a delicate balance between controlling inflation and supporting growth. Trade policy remains a wild card, with potential tariff announcements still looming over sentiment and affecting market direction. On the domestic front, Indian markets are approaching this week with cautious optimism, despite profit bookings seen on Friday. FII selling has moderated significantly to just 3,788 crores so far this month, compared to 12,074 crores in October, suggesting that foreign investors are returning selectively to Indian equities. Domestic institutional investors, or DIIs, have remained consistent net buyers throughout, accumulating over 51,000 crores this month alone, providing crucial support under the market. The week ahead will focus on several key catalysts, including Q2 fiscal 2026 GDP data, progress on India-US trade negotiations, and any developments on the Ukraine peace deal. The moderation in FII selling combined with strong domestic buying suggests that while there may be near-term consolidation, the longer-term trend remains supportive for Indian equities. From a technical perspective, the Nifty 50 finds key support at 26,000 and 25,850, which aligns with the 20-day moving average. Consolidation in this 26,000 to 26,277 range appears likely given the overbought conditions visible on intraday charts. Resistance sits at 26,250 initially, and a successful breakout above this level could push the index toward 26,500 over the coming days. Bank Nifty continues to show relative strength with important support at 59,000 with strong put writing backing this level. Below 59,000 critical support exists at 58,900 to 58,500, backed by solid demand. On the upside, 59,500 serves as the next resistance zone before 59,800 to 60,000. As long as Bank Nifty holds above 59,000, the broader uptrend remains intact despite any near-term volatility in the overall index. In commodity markets, crude oil has slipped further to $57.77 per barrel as of today, down 0.51% for the day on concerns about global demand, with year-to-date declines reaching -19%. The weakness reflects broader economic growth concerns affecting energy consumption. Brent crude is trading at $62.26 per barrel. Gold prices remain steady near $4,064 per ounce, holding above key support levels, though well below the October peak of $4,382. Silver is trading around $49.97 per ounce, maintaining its strong year-over-year gains despite recent consolidation. As we head into today's session, traders should remain vigilant about the modestly negative GIFT Nifty levels which suggest profit-taking at higher levels is underway. The focus should be on quality large-cap stocks, where domestic money is still accumulating, rather than chasing volatility in momentum names. Bank stocks remain the market's backbone, with 59,000 providing strong support. With mixed Asian signals and moderation in FII selling, the key will be whether Nifty can find buyers at 26,000, or if consolidation persists before the next decisive move. Use any weakness toward key support levels as potential buying opportunities in fundamentally strong stocks while maintaining measured position sizes. Stay tuned for the evening wrap and send in your questions and subscribe to this podcast to hear US every day.